Welcome and thanks for watching. This is Seewing Yee, and today's topic, the name is just one word. It's one thing you learn. That one thing. In what movie that came from? Billy Crystal in City Slickers. One thing you learn. Okay, I just I just thought of it. Anyway, the name of this presentation is Blueprint. Attention real estate investors, please pay attention. I'll do it at a very high level. I'm not gonna have time to go over all the technical details, nothing like that. Everything is conceptual, it's high level, but I think you're gonna like it because no other real estate investor will teach you in a way that I'm teaching you right now. By the way, before I go any further, if you see value in this presentation, please smash the like button and also subscribe to my YouTube channel. And finally, provide your email to our website below you so you can become a free member of our real estate investing community with our network. All right. So without further ado, let's get started. Blueprint, rental property or income property could be single family home, could be a duplex, a triplex, fourplex, or multi-units, whatever. Income property, history's most powerful and proven and attractive multi-dimensional tax-favored real estate asset class. It's also the world's greatest wealth-building investment vehicle. Why? Unlike other asset classes, rental property will give you many different ways to achieve financial benefits. Let me break it down. One way is cash flow, positive cash flow, and ultimately passive income. Number two, tax benefits. I'm not a tax advisor, but everybody are qualified for different aspects of real estate taxation, consulting advisor. However, among the tax benefit you can gain or passive losses, depreciation, cost segregation, real estate professional tax status, you can cash out refinance tax free from your leverage real estate properties in the future. You can do 1031 tax deferred exchange. And third, of course, over time, historically speaking, your property will appreciate in value and your property will grow. The equity will grow. And lastly, leverage. No other asset class allows you to leverage. When you leverage other people's money, OPM, other people's money, like the lender or the bank or a mortgage, you can leverage into an amazing 30-year fixed rate mortgage, which hedge against inflation. Okay, I know some of these words are very technical, but again, I'm going to ask you just to digest this high level information from 20,000 foot above, and then I'll teach you about the technical aspects of real estate investing throughout my YouTube channel and in my network. Just want to keep that in mind. Cash flow, passive income, tax benefits, appreciation, equity growth, and the power of leverage, getting a loan, getting investment loan, getting financing through leveraging. All right. So I'm going to use this one example. It could be any kind of numbers, could be a lower price point, a higher price point, but I'm just showing you a generic example of ideal investment property. You can make this happen. And this is a real property in a real location here in Florida. Today, as we speak, in the first quarter of 2023, things always change, of course, over time. But this price point happens to be a new construction, new build, three cookie cutter, three bedroom, two bath, single family home, anywhere from 14 to 1800 square foot. That's the benchmark. This is a benchmark. And as you can see, the rent to value ratio, I'm not going to go over the formulas. It took me several hours to explain on another video, perhaps. A rent to value ratio, 0.08%. Capitalization rate, 7%, cash on cash return, 6%, total return on investment, 30%. This is just on the first year, by the way. All right. So you put 25% down payment. I know investors, you have several loan options. I'm not going to get into that. The assumption that I made was it is going to be a 6% 30-year interest rate, 6% rate. Could be a little more, could be a little less, depending on the buy down and all those kind of things, different loan options you have as an investor. So 25% down payment, a 6% 30-year fixed rate mortgage. And so therefore your monthly mortgage payment on this property is $1,461. All right. That's part of your monthly expenses, part of your debt service, and 25% down payment. You put in 86 grand cash out of pocket and closing costs around $4 grand. And the projected monthly rent payment is approximately $2,600. So you minus the vacancy factor, which is 2%. You minus the taxes, which is monthly, as you can see, monthly taxes, monthly insurance, and property management fee at 8%, if you will, and some vacancy factors, which is right here, 2%, and no maintenance factor, at least for the first year, because this is a brand new property. All right. At the end of the day, your gross income of $2,600 minus the mortgage payment, minus your taxes, insurance, property management fee, and the vacancy factor, and what have you. At the end of the day, you will achieve a monthly net positive cash flow of $449. Right? So instead, again, I'm not going to go over any other metrics, but you can marvel at this example, in this pro forma on your own time. You can pause it once you watch my video, but this is a very good example of a benchmark of an income property. Okay. So I'm going to refer back to this. All right. Furthermore, rented property, as I stated briefly, is a multi-dimensional asset class. I already gave you the four benefits. I'm gonna give you some more. The hits keep on coming. Unlike other classes, asset classes such as stocks, bonds, crypto, bitcoins, etc., where after you purchase, you are done. There's nothing more you can do to it. It is what it is, right? There's no down the road changing stocks and mutual funds and crypto. Most of these other asset classes are just one dimensional, as opposed to rental property is a multi-dimensional. Here are some additional multi-dimensional asset of a rental property. Ultimately, I know not every rental property can apply to the situation, but I'm going to give you from a theoretical point of view, it could happen. It all depends where you buy them and what kind of property, what neighborhood, all those kind of things. But I'm not going to go into details, but potentially your income rental property can achieve some of the benefits down the road, which is not all conclusive. You could, down the road, you can convert your rental property. Initially, you buy it for a 1-year annual lease. Okay, there's a typical standard lease you charge, 1-year annual renewable lease. Down the road, again, depending on the location, the neighborhood, the type of property, etc., you could convert your property from a long-term annual leasing into a short-term rental, Airbnb, whatever. Or you can add a additional dwelling unit, which is an ADU. And furthermore, you can rehab the house. Not in this case, I just gave you an example of a brand new house, but if you would have bought an older house, you can rehab the house. You can add a room, add a bathroom, a bedroom. You can add some intrinsic value to that rental property that'll give you a higher market value at some point in time in the future. So you can do a lot of different things. I use the word, you can negotiate your property over time down the road. That's the greatest flexibility owning rental property. And the next scenario is number 3, you can recharacterize your rental property into an owner occupier principal primary home. If you can live in there and recharacterize the rental property and live there physically yourself, hopefully you're going to enjoy the time you there, either short-term or long-term. You can do that. And number 4, you can convert into a vacation home, Airbnb. And 5th, somewhere down the road, you can do a 1031 tax deferred exchange, meaning you might want to sell the home after you have achieved a massive amount of equity 5-10 years later. And whenever you sell your rental property, you have to pay capital gains tax. But if you do a 1031 tax deferred exchange, you can defer your taxes as long as you replace that property with another rental property or more than one rental property, and not needing to pay the capital gains tax. You can do a cash out refinance once your property achieves a loan to value of 70% or less. You could potentially do a cash out refinance, the equity of your home, tax free, by the way. Here we go again, right? Multiple tax benefits associated with owning a rental property. You can do a cash out refinance, depending on how much you can cash out refinance. You can leverage more. You can buy more rental properties. You could start with one rental property initially, a few years later, depending on the equity appreciation, depending on what market, whatever. Down the road, you can do a capital refinance tax-free, but you can get in a loan. So use the equity for down payments to leverage into more rental properties. You can scale your real estate portfolio over time, and that's what you should do anyway, long term. And number 7, on your existing rental property, you as an investor, you could create a status, right, or S terminology, real estate professional tax status, whereby if you qualify, if you own a lot of real estate at some point in time in the future, if you are you have a very high income, if your non-working spouse or part-time spouse would do the real estate activity to the tune of 750 hours per year, and then, all your taxes can be offset by all the unlimited passive losses depreciation to offset against your ordinary income. That's all I'm going to say. Consult your tax advisor. So this tax pro, the real estate pro status apply to certain categories of individuals, but if you do qualify, and you could essentially pay very low taxes, or even at certain points in time pay zero taxes, even though you still are making very high income. Right. And number 8, an investor can reclassify into a quote unquote tax participant status. Tax active participant, you can only deduct up to $25,000 of depreciation in any given year if you made more than 100 grand. If you make less than $100,000 adjusted gross income, and then you could claim up to $25,000 of depreciation as a paper write-off against your active income. So again, consult your tax advisor. So the active participant status is a little bit less beneficial than the real estate professional status, but either way, you're getting your taxes reduced using some of these methodologies. Before I conclude this, real estate is a long-term buy and hold strategy. If you look at the historical data back in 1945, like 80 years, real estate has always gone up, with the exception of the 2008 housing crash. But over the long term, even right now, we are going through some slight correction. But over time, if you invest and buy for the long term, you could really do very well. If you don't know history, you're going to do to repeat the past. Okay. Now, the reason why I want to, for the remaining few minutes, I want to go back to here. Now, this return I just show you is just the first year's projection. Do not dwell on some of you thinking, oh, this monthly cash flow may not be that high. Look, it's not about monthly cash flow. As I told you, there are multi-layers of benefits associated with investing. Now, second year, this $2,600 monthly rent is not going to stay static. Due to inflation on a historical basis, you're going to raise your rent. If you're going to raise your rent in line with the historical inflation on a year-to-year basis, so we're going to use the assumption of 5% inflation down the road. You can make the argument you can raise your rent every year or longer at 5%. So this $2,600, if you project 10 years down the road, just do the math. I'm not going to do it for you right now. You're going to increase your rental income. You're going to increase your cash flow. This 449 is just the first year. Potentially, you can increase your rent based on inflation. So 5 to 10 years, your positive cash flow, your gross rent going to be higher. Therefore, affect your monthly net cash flow. So you can gain a lot of cash flow. Then secondly, your loan balance. Right now, your loan balance is $243,000. Think about it. Your renter, not only your rent this $2,600 or paying all your monthly debt service, you are outsourcing someone else to pay off your debt obligations. And that is the tenant. That is the renter. Isn't that cool? This is self-liquidating debts. All you come up with is a down payment. Everything else is gravy. But assuming you can get some good renters over time, the renter can make you rich. So over the years, on every year, once you calculate the math, this loan balancing will get lower. If your renter is paying down the mortgage on a monthly basis over the next year, 2, 3, 4, 5 years, your loan balance is going to be lower than 243. In the next 10 years, it could be down to a loan balance of 100 or 100,000. Therefore, when you increase your rent, and if I project the annual appreciation rate historically of 5%, think about this. Your rent, you can have higher rental income, you can raise your rent in alignment with inflation. If your house is projected at annual rate appreciation of 5%, as I indicated here, your rent will go up and your equity will go up, and your loan balance can come down on a year-to-year basis, or else being equal. You're going to have your loan to value is going to keep on increasing. So you can make money, you're making passive income monthly, annually, over time. Your tenants can pay down your loan. The lower your loan pay down, equity increases. The gap between the debt and the equity keep on widening in the opposite direction, over time, give you a lot of equity. And along with the appreciation of 5%, the power of leverage, you're making money over time. If you do the internal rate of return on a year-to-year basis, for the year 1 to year 10, the year 10 to year 15, internal rate or return is 10x. The bottom line is real estate is an amazing asset on a historical basis. It has been proven it's very attractive. Beats other asset class because there are so many multi-dimension aspects associated with it. So if you could buy over time, everybody's financial situation is different. You can buy a number of these properties in different locations, cash flow properties, and over the next 10 to 15, 20 years or more, you could retire and you could achieve financial freedom. I'm just giving you an example of one property, so much value beyond that. Don't worry about the economy, what's going on currently. That's irrelevant. If you have a good tenant, you have a good rental market, you have a good property management that's helping you to scale your portfolio, you have a good team working with you. That's how you scale your portfolio. I know there are risks involved. I'm not going to discuss that. I mean, vacancies and maintenance, upkeep, those are part of the process. Okay, you deal with it, but the benefit is so amazing. Multi-dimensional assets. I just gave you like more than 10. I lost count of how many multi-dimensions are there in a typical one rental property, right? So hopefully this will provide some motivational for you, some inspiration for you to take that step and take action to achieve long-term generational wealth. You receive a lot of value from this video. Please smash the like button, as I said earlier at the beginning, and also subscribe to my YouTube channel if you have not done so already. And of course, subscribe to my email newsletter on the website below you so you become a free member of our real estate investing community so you can become a successful real estate investor. Thank you so much. This is Seewing Yee. Have a nice day. I will see you on the next video.